Well, good day all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for a pretty wild trading day. Actually, end of the trading day would be a better word. And this is for April 18th, Tuesday, 2023. You know, at the end of the day, we saw Netflix's earnings come out. It's just one of many companies that came out today. Goldman Sachs was a miss. Bank of America did better. United Airlines came out. You saw how they're doing. They're still looking okay. Netflix came out after the market. And so did Western Alliance, by the way, the bank. On Netflix, they came out. The stock went down instantly, 10%. That's a big drop on a company that's $300 and some odd. Within an hour, it was right back to higher on the day. So trading those aftermarkets, trying to figure out what's going on. I don't understand what the traders read wrong, and I want to be clear, read wrong. I read the report, and it seems to me that they're doing fine in the areas where they've increased the password security, where they've launched the ads. In other words, you can watch Netflix for, I think, $6.95 instead of their normal price, but you're going to have a certain amount of ads that play on a regular basis. It's annoying, but you get to watch their programs. And, of course, the password sharing, where you can pay for it now and do it. It's coming to America this second quarter. We'll probably see the results according to them in the third. But if you extrapolate how Canada did with it in the other areas, they seem to have improved. So that was the first thing I looked at. Western Alliance. So I was looking to see how much the deposits ran from them. Well, that's not the case. I had to sit down. I kept looking at the number. They actually, through April 14th, increased their asset balance in deposits by $2 billion. I didn't expect that. Yet, in the aftermarket, or in the futures market is the right way to say it, on what stock indices are doing, they're all lower in early trade tonight. So in Netflix, you closed at 333.70. I'm telling you, it was down 10 point some odd percent right after the earnings came out. We'll see what it does in the morning. The pattern is down. Lower highs, lower lows, bearish. The market is fighting a battle at the 18-day average, but the bias is down since the market closed under it. The objective would be the first challenge of the 100-day average. That's the closest number. And when you put on the Bollinger Band, it's right in that area as well. If you add a 10% decline to it from there, you would have hit that. But remember, that's what the market does in the aftermarket. This is what the market's going to do on an exchange, not the same thing as you've got through that. Momentum-wise, that would take the market, if on that 10% decline, most likely into oversold territory as well. Doesn't mean you can't be there in the morning, but I'm just telling you, support awaits the market if it decides to recapture the losses that it had. In Schlumberger, the big fight is the 100-day average of closes. You can see how the market is right here. It just wants to keep fighting with itself, and that's what it's going to do. In UGA, higher high, lower low. What did that do to the market? Well, very clearly, what that did to the market is it puts the market on the run at this point in time. You've lost in UGA, the embedded reading. When you lose an embedded reading, often, and I teach this in my course that I hope you take advantage of, I'll walk you to this one. You have a market that's embedded. Embedded means the slow stochastics, the red and the blue, are going sideways over an 80 level. When you lose that by one of the numbers, it'll typically be the red first. Closing under 80, the odds are the market's giving you time, you're coming out, the odds are strong. You're going to go back to the 18-day average before you go up and make a new high. Ready? There you lose it. Tell me what you did. Okay? That's what I'm trying to explain. Now, from there, you're back into an area where is it going to develop a downtrend? Well, you don't have it. You have a higher high, lower low. Why does this occur? The reason it occurs is because often, at least this is my own theory, momentum, I believe, leads price. And in doing so, when you lose the momentum, there are times when you don't see it in the price. You see that the market's giving you a correction, but most people aren't paying attention to this. Most people, MACD, relative strength, whatever their indicators are, if they see this, they go, it's a fluke in the pan. It's going to give you a little correction. Maybe. What I believe happens is the people that understand it are bailing and they're going, we've lost that. This market's got a problem, and the problem can carry it to the next major moving average. That's what I teach. And boom, that's where the market went. Tesla, tomorrow we get Tesla's earnings, so it's going to be an interesting game. They have been aggressively, as you know, in the quarter cutting prices. So what does that do to their per unit profit? Now, everybody's going to be poring over these numbers. We know that they had, on a monthly basis, gotten up to recent goals or very, very close to them. What does that do with the per unit? And that's what the market's going to look at. If the market were to take out tomorrow 189.70, and I think they report after the close, that would flip the trend to the upside, higher lows, higher highs. If it can't do that, the downtrend's in place and you're looking potentially for the lower band, but you got a problem. You're already in oversold territory. Oversold territories, to me, don't attract new sellers. You have to decide for yourself what's an oversold territory. I teach it a certain way in my charting course. In XLF, you have your embedded reading. So what did the market do? It got up to the Bollinger Band, backed off one day, and past 3 days in a row, it's hit it. So you've got the makings here of what I call that gorilla glue trade, which makes this embed, and it oftentimes tries to carry to, if it's already at a Bollinger Band, if there's a moving average above the market, to it. In this case, it could be the 33.79 level, which is the 200-day average of closes. When we come over to the industrial sector, I've been telling the traders in my morning video, this market looks to me like it's trying to get up through the 100-day average, and if it can succeed, maybe the Bollinger Band's in play. The word maybe, you're overbought. You can get there, but you're overbought. I don't think you're attracting brand new, fresh buying money. In stocks, the semiconductors are now oversold, and you're basically in sideways action with the downside bias. When we step over to the home builders, I looked today at the housing permits and the housing starts, and I think they're very bullish on single-family homes. When you looked at the numbers, the headline numbers aren't, but the headline numbers incorporate dwellings that are for 5 units or more. When you strip those out, everything's a go. The amount of starts that began, the permits that have been pulled, single families are on fire again, and that's with mortgages this high. You are overbought, you're at a band. What do I think's happening up here? I think the pros are taking money off the table. They're not bearish. I think they'll look to come in if it embeds back. In the energy sector, drifting at a resistance point. Do you see the 100-day average of closes? If the market wants to lose this embedded reading by the red closing under 79, you open up this as a target. As long as it stays embedded, you still have the potential of getting back here. The momentum's going to tell the story, not price. In gold, the gold market is corrected, past tense now, an overbought condition. Neither number's in the 70s for the first time. It's trying to restructure against the 18-day average of closes. If the dollar embarks on more of a downtrend, I think it gets a bid. But right here, you have nothing. You have a higher high, lower low pattern, and momentum that has just gotten out of being overbought. SLV, you've lost the embedded reading. Have you taken my course? If you've taken the course, then you understand the importance of that. I'll leave it at that. Copper market, still fully embedded. So on the breaks, and it's had higher lows all the way through here, higher highs, ran into the Bollinger Band and still running against it. All it did is you had 2 days over it, pulled back to the right-hand side. It's still a very powerful chart. And as I told you, there's all those tonnage, thousands upon thousands of tons in Peru of copper that can't get out. And that's because of lack of electricity, indigenous tribes, against the pollution that the copper mines are causing, and go on and on with this. China also helped. They came in with a 4.5% growth number today. And while it's certainly not up to the standards of pre-pandemic, I'll take it. It's better than 4% growth, 3.5%. It's not as strong as it should have been, but it means they're going through some copper. In TLT, what do you do in front of the Fed meeting is the problem. You're oversold. You're already at a point where the market has hit the 100-day average. I don't like when my traders go short on the first challenge of a 100-day average that you haven't been at for a while. When we come over to UUP, this is the dollar. Unless you get back over Monday's highs, you're trying to establish a downtrend. If you get over that, then maybe you get back to 28.01 to 03. But right now, I think the bears have control of the market. You've corrected past tense and oversold condition. And all you need to do is start rolling to the downside. If the futures are down tonight, that'll help that. And in FXE, you were overbought. You're correcting, still overbought. Any reading over 70 is overbought. In an uptrend, but correcting that. Let the momentum finish up the trade for you. You know, in the mornings at 9 o'clock, I want you to join me. It's so darn simple. If you're watching me on YouTube, at the bottom of the channel, you see the blue bar. It says join. You can do it that way. What we do is we will start talking, and I start recording at 9. The reason I record at 9, and by the way, this is some of what I cover, not anywhere near everything, is I want the government reports out of the way, and I want the first half hour of all the money that's been trading in off exchange to make its way back in. Remember, they're trading right now in different stocks, different parts everywhere, off market. They come back to the exchange. The algorithms have to match up what the funds have to do, what the futures are doing. Remember, futures trade 23 hours a day in many cases. Not all, but many. And they have to balance out where they're at so that everything comes together. QQQ, DIA, I can go on and on. So as that's occurring, you let that all come into play. And at that point, I'm ready to analyze the charts, gives you the rest of the day. I have found over the years that works better than jumping in right at the beginning when the market opens. So you're asking for seasoned pro? I'm the guy. I've been around this 54 years right now. That's a long time. I'll give you fundamental technical research. We talk what's coming up. We'll do a lot of talking of earnings, the reports that are coming out, what's going on in the markets around the world. So how do you get to this? Go to our website under research, or you can click right up here. That'll take you to the site to sign it, or hit the join button on YouTube, and away you go there. I'm Ira Epstein. I'll see you tomorrow morning in our morning financial market flash video. You take care.